Today on Focus on Investing, has Facebook recovered from its dip? The effect of Google's stock split announcement, and we take a look at Super Bowl stocks. Time to get focused.
Time to get focused with Focus on Investing.
Gather around, hustlers. That's if you're still living. This is Focus on Investing. I am Focus, and this is your weekly stock roundup. Let's start with a look at the current state of the markets. Here we have the UK 100 index. If we zoom in a bit, we can see that the index was traveling in a bullish direction since the 16th of December. And then we can see on the 21st of January, we had 2 straight days of bullish movement to the downside. If we look across all markets, we can see that we underwent a beginning of the year dip. And each market has been affected by that dip slightly differently and has recovered differently. The UK 100 index recovered quite sharply after 3 days, hovered at its most recent high, which is around the 7612 level. Then on the 9th of February, price broke and closed above this recent high level, went on to have a second bullish day on the 10th of February. However, on the 11th of February, we can see that price did actually dip briefly below this high level before closing as a bullish candle. However, it is above our most recent support level. So we have seen the UK 100 index has recovered quite well from this beginning of year dip. If we look at the S&P 500, we can see from the 4th of January, we've actually been having our bearish movement. And you can see how the beginning of year dip has been more severe on the S&P 500. It attempted a 4-day recovery. However, it failed to break above this 4593 area. It pulled back and tried to retest this level of resistance. However, on the second time of asking, it failed and fell back to this 4418 area, creating a double top. Ideally, we'd like to see price recover back to this 4804 level, break this level of resistance, and then continue on to the upside. We can see that stocks on this index are having a bit of trouble recovering from this recent dip. If we take a look at the Dow Jones, we have a similar story. Price is struggling to break through the 3583 level after bearish momentum from the 4th of January, 4 days of bullish momentum, and then a similar double top pattern forming. We are currently resting at this 3473 level, and we'd like to see price recover back to this 3682 level. We have seen the Dow Jones dropping more than 500 points and the S&P 500 sinking 1.9%. These indices are the losers of Russia's impending threat on Ukraine. However, if we take a look at US oil, we can see that this bullish candle on the 11th of February shows that oil seems to be the winner of this threat of war.
It's over! The Bulls win at the buzzer!
Oil rose 6% on Friday. Oil futures surged 0.86% to a 7-year high that has crude within a hailing distance of $100 a barrel. Let's switch gears to Facebook, or Meta, which saw a massive dip on the 2nd of February. Shares of Facebook parent company Meta lost more than a quarter of their value. The drop follows its 4th quarter earnings report that came in well below expectations. Meta is now trading at its lowest level since July 2020, and it lost a third of its value for this year. It dropped so much that it's now no longer the 7th most valuable company, and it has slipped to 8th behind Nvidia. Meta now has a market value of roughly $600 billion. So how has it recovered after its dip? If we take a look at the chart after the 2nd of February, we can see that price continued to dip all the way to the 11th of February. So it's continued to see bearish momentum on Meta. This dip doesn't seem to be recovering anytime soon. However, we could be seeing a possible double bottom forming at this $217 level. We saw price test this level once and has retested for a second time without falling through. Hopefully this level will hold and we'll see price raise back to its most recent high. Okay, let's take a look at Google, or Alphabet Inc. We can see that price has been on a bearish decline down to the 24th of January. We saw a slight recovery all the way up to the 1st of February. This is when Google made its stock split announcement. Price gapped up to this 3042 level. However, price has continued to go down since that announcement. It has fallen to similar levels pre-announcement, and hopefully price has found a base at this level and will return to post-announcement levels. This weekend is Super Bowl Sunday, where the Rams take on the Bengals, but let's take a look at who's the winners off the field. Let's take a look at Nike, or Nike, depending on which side of the pond you're on. They have an exclusive partnership with NFL all the way to 2028. The partnership allows Nike to outfit all 32 teams with uniforms and sideline apparel. For the next 6 years, everything on the field will be Nike. So you would think that the Super Bowl would be good for Nike. However, in the lead up, we've seen nothing but price going down. And since the 24th of January, price has been stuck between these levels of consolidation. And if we look at the last trading day before Super Bowl, we can see that the Bears won.
It's good, and the Bears win it.
DraftKings is just one of 3 sports betting companies that has partnered with the NFL and is the NFL's exclusive official daily fantasy partner. We can see in the days prior to the Super Bowl run-up that we actually had some bearish momentum. However, since the 24th of January, we can actually see a bit of a recovery with some bullish movement, with price seemingly unable to break this $23 level. We can see it's made 3 attempts, 1 attempt here on the 1st of February, another attempt here on the 9th of February, and its 3rd attempt here on the 11th of February, with a trend line forming in price. When the market resumes, we may see some bullish momentum up to its previous high level of $27, or we may see it go back down to the downside at this current support level of $18. So Super Bowl has seemed to be beneficial for DraftKings as it's turned around its downward momentum from the 24th of January. We'll have to wait and see whether the exposure of the Super Bowl will bring it back up to its most recent high level, and hopefully it will break this resistance. If we look at Under Armour in the days leading up to the Super Bowl weekend, we could see quite good bullish momentum. However, if we look at the candle on the last trading day before the Super Bowl weekend, we can see that it's going down.
It's going down.
It's a long and strong bearish candle that shows that the Super Bowl has been bad news for Under Armour. If we take a look at Caesars Entertainment, Caesars Casino Resort is an official sports betting partner of the NFL. We see a similar story here. From the 12th of January, price has been on a bearish decline to the $70 area. We saw a pullback and a retest, creating a double bottom. However, we've seen bearish momentum leading up to the Super Bowl. If we look at the final trading day before the Super Bowl weekend, we once again have seen a bearish candlestick. So it appears that the run up to the Super Bowl has been good for these stocks, but the final trading day has seen investors take profit. If you would like to keep up to date with the weekly action in the stock market, hit that subscribe button. And if you'd like lists of stocks to buy now and stock analysis tools, then go to focusoninvesting.io. Link is in the description.